I would have trailed stops doing that, or I wouldn't have done this. And if you do that enough, that really, really messes up your data. So if you're trying to optimize, I would definitely say do it on live markets. And journal your trades, and then look back. What's the common theme between your losers? What's the common theme between the winners? Increase whatever is helping you win. Obviously, decrease whatever's making you lose. So yeah, it's simple, but it takes time. Yeah, grids, I agree. FTSE's a mess. Yeah, backtesting's good to get an idea, and this is just my opinion. Obviously, everyone's different. People's brains work differently, but backtesting is good just to test a concept. If you want to try whatever it might be, just get a feel for it, see how the market moves and all that sort of stuff. But to actually know if a strategy works, you kind of have to just live test. Because the thing is, backtesting is great, but there's a lot of small problems, and all those small problems can eventually lead to a completely thrown off model of what your trading strategy actually would be like. Because obviously it's not good for us to sit there and be testing. It's like, oh, this strategy is just maybe 5% in a month. This is perfect. And then you go through a 10 loss streak, obviously on backtesting software, and you're like, oh, maybe I wouldn't have taken that trade really. Or, I actually would have decreased my risk after a winning streak, blah, 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 blah. And it gets in, you end up losing your own mind, essentially. You know what I mean? So yeah, backtesting's good, but it's not the holy grail, I don't think. And again, it depends how disciplined you are. For me, it's not the best, but it's all up to you. Honestly, I think live test is better than back test. What do you think on that? Yeah, I agree. Yen pairs, I think, I don't know. I'm a little bit mixed on yen because it's very clearly doing well. I don't think anyone can disagree with that. The problem is I don't know how long it's going to last. So I would actually I am tempted really to go in for some long positions on the yen. So things like euro yen short. However, the trend is still to the downside on the yen. We've created lower highs very simply. We are coming up to an intervention, very likely coming up to an intervention by the MOF. It seems like the Bank of Japan is going to hold their rates on the next meeting. So I don't know. The economy still isn't really in a great spot. So yeah, I think short-term positions, buying the yen is okay, but I wouldn't really be positioning any swing trades on the yen at the moment. You think gold's playing with you? Let's see what gold's doing. Yeah, see, we just had a very clean break. So sellers here are now sweating, and they're praying, and they're on Google. What's driving gold? I remember I used to do that. I used to go on Twitter and type in the ticker of whatever else I was trading. I used to look at what everyone else was saying so I could feel better about my positions, whether it was good or bad. Looks like someone might be coming on here. I think I missed a message. I wasn't looking at Discord. Yes. Chris is here. Okay, my bad. I ran over. I had Discord muted. Guys, my time is up here. Chris is coming to take over the show. My apologies, Chris, if you're watching this. I didn't mean to run over. I lost track of time. Guys, have a great day. I will see you probably next week. Don't get margin called. Have a great weekend. See you very, very soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, If you're wondering what trades I'm taking and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Thursday. Oh, welcome back. So we have some earnings today that I want to take a look at, and didn't have a ton of movement. So Tesla, there's your earnings candle, fading a little bit to the downside, but not nearly far enough. So I had trades on Tesla. I've been having some difficulties with my Tasty platform all morning. The option chain and just everything is being really, really wonky, which is unusual. But it's like always recentering, and it's driving me crazy, and it is really pissing me off. So anyway, I will spot check a couple things, but I'm just going to end up getting on support with technical support after the session and seeing if there's anything I can do to troubleshoot this. I've already restarted the computer. It's Tasty Trades desktop platform right now. From what I can determine, everything else is running nice and smooth. Long story short, it doesn't matter. I'll still, like I said, my parting gift for the day, considering the platform frustrations, is that I'm up to a fresh high for the year, which would give me out of the gate so far. I'm up 21K today, 124 out of, so I'm up 4.7% thus far. Not too shabby. So keep an eye on that. Anyway, Tesla had earnings, as did Meta, as did Microsoft, as did IBM. And Microsoft is going to be a winner, even though that was a tiny little amount. I do want to take a fresh trade on Microsoft or look at one. I have this little tiny 23 cent broke wing butterfly with a trap that was anticipated if we pushed up to 470. We had a slight beat on both sides, so earnings per share and revenue was actually positive, but why did it drop? Let's find out. Can Tesla becomes the world's most valuable company? Well, we'll find out, won't we? Strong buy despite slowing Azure growth. Azure. But they're moving. So anyway, Microsoft's looking good for profit. Meta still has room to move for tomorrow. I need this to get above 702.50. It's at 704.96. So let me have a quick peek at Meta. Right now, trade. Baidu. Let's go to Meta. Come on. And this is what I'm talking about. There's my trade there on Meta. So I put in the 702. So what can I close this whole trade for right now? Let's find out. Max profit on one side is going to be $2.50. So the trade itself, I paid. Let me see what I paid for it. I paid $1.33, and it's currently up about 20 cents a contract. I can do nothing and just see if it gets above 704. If I want to be a little bit more conservative, if we come back in and fill the gap, this is probably not the best thing. But if I did this where I take the profit on it today, I might just grab the 20 cents and see if we don't have a huge overreaction. I might just grab the 20 cents. So we're trading $1.33. Right now I can close. Oh, you got to be kidding me, dude. Just like that, 50 cents. $1.50 to $1.30, just like that. Son of a biscuit. Let me see here. Let's see what we've got going on for the day. Can we get up to the highs at 710? See if we get back to those highs. My concern is that we come back into this yellow box, which is where I need price to stay out of. I need price to get above the yellow box or below the yellow box. In between is my max risk, which isn't a ton. It's $1.33 max risk. So it's not a deal breaker, but this is obviously a large area where I'm looking for earnings to either go up or down, and in the middle, that's my risk. So I may be looking to protect early. Looking a little bit better here. Let me see if I can just get a buck for it. I'm just going to take a break even on this trade. And I've been fighting this platform all morning. Trading at mid price at $1.35, $1.38. See if that one gets filled. Come on. $1.43 mid. All right, I'll let that one sit for a moment. If I go $1.35, that's at least break even. Just got filled for $1.40. Okay, so that trade's out. New trade on Meta. That one is posted. IBM's posted. Microsoft posted. Meta posted. All right, let me do an update to this one. So I'll do a reply. Trade management update. Meta. Earnings play. Paid $1.33 debit for both sides of earnings, which is a bull call spread and bear put spread. Closing at $1.40 credit for small win. Okay, so that trade is a small win. So that trade's done. All right, Microsoft. This one is probably like a 99% chance of profit. We're just going to keep the 23 cents. I'll do a quick update on that one as well. Microsoft. Apply to this message. Trade management update. Microsoft. Earnings play. 23-cent credit on broken wing butterfly. I'll let it expire for full profit. So it'll trade at a 0.0 debit by Friday expiration. Okay, so I got that one. I do want to take a look and see if I can get another trade in. This should have jumped the IV for Microsoft. So I'll take a quick peek at that. Yeah, this is going to drive me crazy all morning. I tend to operate a little bit faster than just watching a broker platform be all glitchy on me. Meanwhile, I've got a bull put spread in on SPX that is 3 points away from a threat. Fill the gap and bounce up. Don't be an a-hole at SPX. Everything's up today. China's up today. The trade I took on Alibaba looks pretty good. I'm going to look at another trade for Microsoft. I'm looking to fill in some of the gaps here. So I don't necessarily want to go all the way out to May, but February, March, April, these are all monthly expirations. I'm going to try to do a fill in here by maybe 45 or 60 days. Let me see if I can find the levels that I want. I like the 370 area for like a ratio spread or some income. So let me take a quick peek at that. Also, not that this is going to be fun for me to trade it, but if we are breaking below in the futures market, this might be a good time to look at a little breakout trade. So we've got some chop here this morning, big fake out right around the open, and push. I mean, this could be pushing right back down towards FOMC lows yesterday. This is where we had a bunch of noise yesterday during FOMC. We could just be in for a gap fill today. Like it's a pretty choppy market. So I'm not going to jump into futures yet, even though we are getting a pretty fresh breakout. If I was going short on futures, I like this previous low from yesterday around 21,390 on NQ. And if you go in that ES, that'd be 60.45. But if we're just coming back in to tap the gap and have some intraday noise, then fine. But SPX is 60.20. I could see that being a bounce today. SPY, I talked about this all day yesterday. 610 on the upside. 595 to 590 on the downside. We do have PCE tomorrow, So we'll see if today's price is still like somewhat resilient. I thought earnings would get the market moving a little bit more than it did. So far, it's been pretty calm. I was going to keep an eye on this like 604, 605 level on SPY, 6050 level on SPX. But Microsoft, let me see if I can fill a gap in here. IV should have been jumping up with that earnings. We're up to 28.1. I can fill in the gap here, so I could do March 14th. I could probably put a March 14th in. That's pretty decent expiration. I like that 43 days out. Issue here is, do I get enough premium on it? 43 days out. And this is the garbage I'm talking about with this platform today. There we go. All right, 43 days out. So let me flip this around. How many strikes do I have? Doesn't look like I have very many, but I do have the deltas that I want. I could do a 385 by 380. 380 with 2 contracts. That's not bad. So about a 93% chance of profit. Maybe a 14% chance of assignment, but probably less because I take these shares. If I was assigned at 380, 380 minus 5 minus $1.77, I'd own shares at 373. 373 from current price would be another drop. 373. We'd have to drop 10% additional on Microsoft. So I think this indecision area is, holding pretty nicely. This 200 moving average, I think Microsoft is hopefully staying bid, but a 317 expiration. I like that for about $1.70, $2.80 income. So I'm going to try to place that trade and keep the frustrations to a minimum. So I'm looking at a ratio spread. Let me see if this is any better than doing a 1-1-1. So if I take the 380, go back to 1 contract with that, and then put in a 375, and this would be a 1-1-1 trade. If I can frickin' do it. There. So $1.22, slightly higher probability. I think I'm going to take this trade here. So it's a 1-1-1. Now if I took the assignment, I'd be assigned at 375 minus 5 minus $1.22. Now I'd own the shares at 368. That's even lower. I'm going to take this trade. So hopefully $1.20, $1.22. Let me see if I can get filled for $1.20. And even with all the glitches in the world, still going to place a trade. See if it'll fill. Filled. Filled. Okay, $1.20 got filled, no problem. Similar order. Double check and make sure that account got filled. For $1.21, very nice. Similar. Okay, 2 more accounts. Okay, so go that account. Filled. And 1 more trade here. This will be this one. Buying power reduction 4. This is not portfolio margin, but I'll take the trade. All right, so that trade's in. I'll get that posted in Pulver Alert. So I'm going to put that in my personal tracker first. So just in case you're wondering, like, what, if it looks like it's all glitchy, it's just my desktop platform. Everything else has been totally fine. So here is Microsoft. Say 1-1-1 and all margin accounts. So it's a sell So buy put at 380. Was it 380 or 385? 385. Okay. So buy at 385, sell put at 380, and sell put at 375. $1.20 credit. Willing to own shares. And that is a 3/14 expiration, I believe. Correct, 3/14 expiration. All right, that trades in. Let me get that into our Discord. So Pulver alerts, there you have it. I'll throw that in Discord. I'm going to add this in and sprinkle it into my little income game that I'm trading with Microsoft. So 3/14 expiration. Buy the 385 put, sell the 380 put, sell the 375 put, $1.20 credit. Okay, so let me grab a screenshot of that. There we go. And I'll highlight the one that I just took. So there we go. Get that added in. $3.14 expiration. Buy the 385 put, sell the 380 put, sell the 375 put, $1.20 credit. Willing to own shares, but unlikely assignment. 95% probability profit. Okay, so we got that. Copy the screenshot, and we're posted. Hooray. All right, let me do a quick check on my SPX. I seem to be operating at a 10x speed compared to my broker platform this morning, which is not fun. All right, let's go. There we go. Positions. So the dollar credit trading for $2 from it looks like it. Sorry. I'll get out of this platform so I can just go back to the charts. There we go. Is that right? We're still trading at 210? Come on, jabroni. We're trading at 60.55. All right, I'm keeping an eye on that trade for right now. SPX 60.50. We filled today's gap, bounced off of that. Let's see if this is down, gap fill. If the bulls get back to the highs today, that'd be fine. Okay, let's go top down. SPY. So for the week, here's where we're still at for the week of trading. We obviously had that big disruptive gap on Monday. This is our gap fill. The market came very close to hitting that this morning. We had previous gap levels as well. I'm not sure if that's acting as resistance today. But structurally, I mean, I thought, okay, if we're going to do a full gap fill to the upside, that's 6,100. This also is all-time highs, which we poked last week. So we'll see what this market is made of. But for the week, we're still red, even though we spent Monday retracing and repairing. FOMC yesterday was pretty resilient. We have PCE tomorrow. Earnings for the most part, I'm sure, are steady. But if we go to Microsoft beat on top and bottom, Meta also beat on top and bottom. Tesla, I think, had a miss. So Tesla missed both top and bottom, so earnings and revenue. But Tesla gapped up and it's flat right now. We're going to see if there's some follow through on Tesla by tomorrow. But this was expected to be like a $40+ move, and it's moved maybe like $20. So that was a 412. It's currently three. I mean, it's like a $15 to $20 move, which that's the coin flip with earnings plays. Is sometimes they move a ton and sometimes they don't move at all. And there's never really a perfect answer of like, oh, I should just sell premium and get that IV crash. It's like we see a lot of moves that are very directional and it's way beyond expected moves. I would imagine today that UPS is way beyond expected moves, right? This is at 134, trading at 111. Like UPS is getting smoked right now, and they had a miss in revenue. Now, why is this stock so crappy? I don't know, but I will say that if UPS comes down into anywhere near this COVID crash low, I'm going to buy me some UPS. And realistically, I can probably take a trade in this stock where I'm going to make sure it's not overvalued first, but let's try something like this. Let's go to Simply Wall Street, take a look at UPS. And okay, so they have some risk. Insider selling, profit margins are lower, high level of debt, servicing the debt's not great, dividend not well covered, but price to earnings ratio is below the industry standard. Earnings forecast grow by 12% a year. I know logistically they have some liabilities when it comes to their employment side. I don't know if their drivers are union. Okay, so we're trading at 111. Fair value is 119. That would be enough to keep me out of it for right now. But I will say this: if the IV is high enough, and here we go again, buckle up into the vortex of sucky desktop right now. I want to see what the IV rank is. 52.2. Okay, good. If I was interested in taking any shares, I would say, look, I'll take a stab and see if I could own this around $90. Right, we're trading at 111. We've got a high IV. Could I do any type of trade that gets me some type of bounce around this like 90 to 95 level? Possibly like the COVID low is 82. So let's see what it looks like. So here's the options chain, March 21st to April. Not awful. April might be doable just for a little bit more premium. And lo and behold, nope, it's not even a trade. And why do I say that? Because as soon as I go down to the levels I'm interested in owning, the premium just disappears. So if I'm doing something now, it's fine. But I'm doing something where I want to own it, like ratio spreads, it's awful. So I think I'm going to wait and see if price just naturally falls into the 90s, and then I will revisit this trade. So that's it. Okay. Cold says we are union. Okay. Well, that has always been a bit of a pull on the stock. The reason that FedEx looks a little bit better compared to UPS is they don't have the same type of liability when it comes to union and drivers. So they're going total opposite directions right now. UPS does not look good, but like I said, I would bargain shop UPS. I love UPS. It's always a fun day getting a delivery on something. But I would say if this comes back down to COVID lows, I would take some shares. I would do something to look for this thing to bounce. But the stock itself from these recent highs, it's down over 50%. So again, we talked about this late last year. I've talked about this for a while. Quality over quantity. So if I'm willing to put some ownership of a stock in my portfolio, I do want that to be a quality stock. And performance-wise, I certainly don't want to see something as a stock picker. If you are a stock picker in 2025, if you pick the wrong stock, okay, you can see stocks that are down 50, 60, 70%. All right. I listened to an interesting podcast yesterday with Mike Wilson from JP Morgan. He talked about in 2022, and nobody would believe this because the market was, clearly a bear market, like 20 to 30+% corrections. But in 2022, the market actually broadened out. And the definition of broadening out, you'd think is, okay, if everything's going up, like Mag 7's been performing so well, everything's broadening out by, okay, Mag 7 just stays resilient, but everything else gets more bullish. Well, it could also broaden out the other way, which is everything that has $0 in it and nothing is moving, all of a sudden prices start to fall, right? Guess what happens? All those stocks that have already been beat up so badly, they're not getting beat up any worse. And so people start putting money into those stocks because they're considered value plays instead of dropping more and dropping fresh. That's how the market could broaden out as well. So we can have a broadening with a bearish move just as much as we can have a broadening with a bullish move. And I think that also adds an interesting element to this year's market, that we could broaden out with a downturn because all the stocks that have been underperforming just they don't continue to underperform. Like it'd be the Mag 7 that underperforms, and everything else that's been beat up and now it's considered value is possibly getting some flows into it. So thought that was an interesting angle, which does make a lot of sense because it's true. If you look at like Meta during 2022, it was down. Like this is a stock that has hit all-time highs and has been this like gangbuster rip to the upside. It was down over 70% in 2022. So yeah, things can get really gnarly out there. But anyway, all right. So UPS, I want to take a quick look at it. I can't do a trade that allows me to put in some positions where, I'd have a high probability of profit. I like ratio spreads. I like those 1-1-1 trades, but I'm not going to get the premium that I want. So I'll stay out of it. But I will go ahead and set an alert around this like 95 handle. Of course, I'm out of alarms. That's awesome. So let me just drag this down to, let's say 90. I'll drag it down to like 92. So I've got an alarm on it already. I can't even do it. Whatever, dude. All sorts of fun stuff today. All right, let's keep going. So we've got this. The index is clinging to some gains today. SPX up 0.25%. Nasdaq kind of flat. We've got equal weight up. This is nice. All right, we got equal weight doing a little bit better. S&P equal weight 0.95% versus the SPY up 0.25%. We have equal weight Nasdaq up 0.85% versus QQQ up 0.17%. The Dow's at 0.32. The Russell's up a decent amount at 1.3 or 1.33%. I do have some trades on Russell. So the right there, the March and April, or the March and May, and so far looking pretty good. Volatility on the day is still down. Volatility one day is still down. SVXY, should I bought that on Monday? Yeah, I'll wait. Dollar index. Let's go to the daily time frame here. Dollar index. I'm just kind of automatically linking dollar index and U.S. 10-year. If the dollar can go lower, U.S. 10-year can go lower. It's probably a good thing. This morning's currency strength was all Japanese yen. There you go. So I mean, not like a 160, 170 on the volatility side, but still, this is now in the last couple of weeks, we've probably seen 2 or 3 days where the Japanese yen is by far the strongest currency pair. Right. So I would not mind seeing some weaker dollar. I certainly wouldn't mind seeing some stronger yen just for some of the trades that I'm in. But I'd also like to see a weaker dollar for a softer US 10-year. Tomorrow's PCE data may move the bond market a little bit. I still like bonds long, at least for a trade into 2026 or 2027. That would be a flight to safety. Look, if the US 10-year yields, by the way, if the 10-year yields are not going to go lower, there is a bit of a pain point between this like 4.5 and 5%. This is going to be a no growth environment or a slow growth environment. Okay. So if we start pushing up higher, this is ultimately, especially if we cross over 5%, the reason I say here something will break is because if you could have a bond investor pulling 5% yield with essentially little to no risk. Okay. If you go back in your money markets, your certificates of deposit, people can part ways with liquidity for 6 to 12 months in order to get a low risk yield, right? So if it was zero risk or low risk, then no such thing as zero risk. But if you could pull in 5% on a little to no risk play, a lot of people would be considering doing that. And that makes bonds or, CDs or money market instruments very attractive. So that is the other thing that happens where we get like a big liquidity drain out of equities because it is way riskier to be in equities as yields and bonds would be offering such attractive rates, So I do think that if this goes lower, then equities looks a little bit better. If this goes higher, then we talk about, I think this is why I like bonds. Okay, do I trade Canada 60? No. Nope. Mostly U.S. equities and options. Okay, futures market. Still looking at some commodity-based stuff. Is this thing moving? I don't know. I don't want to throw a trade in there. DBC is still not moving. Credit spreads are still relatively tight. Jobless claims. China, not really a lot of reaction today in China. Alibaba. So bought the shares at 85.50. Bought the shares yesterday in session at 99. We're up to 101 right now. I think there's room to run. I want to let Alibaba run kind of uncovered. I do have a covered call on Baidu. It's covered at 95. I actually might look and see if I can roll this right now. Let me see. Again, back to my broker platform. It's like my least favorite thing right now. Alibaba. Positions. IBM blasted up to the upside. They had earnings today. They went way higher. I was considering a fade on that move. I mean, I don't know if there's a bunch of momentum behind it, but I was considering a fade. I'll take a look at that one today. I just trying to keep the navigation to a minimum because everything is just kind of lagging with my platform here. So Baba, I want to go to Baidu is the one that I have shares of. So Baidu trading at 93. There's my 95 by 70. Let me see if I can do a roll on this one. So if I can roll the shares, so what I'm going to do is roll my collar. February 21st is the expiration. I still have a bull put spread out to September that's looking pretty good for profit right now. But the 95 by 70 is my collar trade. So I sold the 95 call, bought the 70 put. What I'm going to look to do is see if I can roll this. And hopefully this is going to give me some credit. So if it rolls out to the end of February, I get 35 cents. I might go ahead and roll this out to March. So March 7th, let me go to the main expiration on the 21st, 14th, March 21st. I think there's earnings on Baidu. That is the 18th of February. So I'd have to deal with earnings. And earnings obviously can be positive or negative. This might still have a lot of choppiness here. But if we're, up and down, like fine. Or we just have this thing starts to go and I don't know. I mean, all of a sudden, if the play is China tech and the market starts running with it, then I'm going to try to do my best to stay out of the way. But if I've got it covered and I roll it out, grab a couple more bucks, let me see if I can roll this out and up. We're hitting 60-40. Gosh darn it, dude. Come on, gap. All right, I'm just watching this level here. So we are coming back in to officially close the gap. Now, are we going to bounce? Taking on some heat if we don't. So I'm going to keep a close eye on that one. Let me set a chart alarm at these lows. If we take out the lows, that is no bueno. At least for an intraday trade. All right. I want to take a look at that roll. So if I roll it out, jeez, oh Pete's, dude. This platform is absolutely driving me crazy this morning. So I've got the 95 by 70. I'm looking to roll it out in time by another 30 days. And I'm going to try it. My goal would be if I can roll this up. Oh my gosh. Okay, if I roll it up to 100. And I roll it down to 75. Come on. That's still a debit? Really? Let me see if I can do this to 70. That's break even. So I can move the strike up $5. Doesn't really cost me a lot, but I got to change my. All right, maybe I got to move this down again. So I get $5 more of credit. I get 10 cents more credit. I get $5 more profit net. I can roll this up to 100, roll the put to 65, and I can still pull in like 5 or 10 cents credit, which essentially makes it a free collar but I'm adding $5 of profit to my bottom line. So we're trading at 93.29. I go from a $95 call away to a $100 call away. That's okay, and that's on the higher end of the expected move. The hard part might be staying ahead of this thing. You know, like if this is going to run higher than $100 in here, like getting a call away at 100, I get a lot more profit. My break even's in the 80s. So obviously, I'm trying to go after the biggest win I possibly can as far as making money on the trade. Make 14, 15, $16 a share. I'm okay with that, but got to keep it close. So I might consider this one. So if I roll out to March, roll it up to 100 and roll the put down to 65, I can get 5 or 10 cents credit. Let me see if this will actually take. Might take me all morning to fill these freaking trades, but let me see. 10 cents credit. Survey says 12 cents credit pending. Replace. Try 11 cents. $0.11 not filling. 10 cents. Come on, man. I mean, it's worth $500. It's definitely worth considering the trade. So I do want to consider the trade. So I'm okay going like 9 cents or 8 cents as long as the collar is basically paid for, or it's not going to cost me anything. I don't want to do a debit to do a collar. I don't want to add it. So 10 cents not filling, 13 cents mid price. All right, I'll go 9 cents. Worst case would be like down to 5 cents. Try 9 cents here. Try to get filled at 9 cents. So not filling. All right. Just going to see what price I get filled at and how long this takes. Try to go 8 cents. I mean, come on, dude. 12 cents credit. Give me some fills. Like I said, I'll take this down to 5 cents, which basically makes it a free roll. I don't love that, but I'm adding $500 to the bottom line. So I'm trying to get it rolled for another 30 days. All right, that's not filling to 7 cents. I'm just going to go to 5 and hopefully that will fill. $0.05. Mid price is 14. Come on. If that doesn't take, then I'm not going to bore you with this, and I'll just try to do it separately. So I'm looking at a, this is Baidu, 221, 95 by 70. Looking to roll that to the 321, 100 by 65. Anything. All right, that's a to-do. And SPX is dropping through 60/40 like an a-hole. All right, let's keep going. Do I have a guest on after me? If so, that's cool. That's great. I want to get on the phone with Tasty Trade and do some quick troubleshooting because this platform is driving me crazy today. FXI going higher. KWeb going higher. MCHI going higher. Like China's getting some pretty good flow right now, which I am not unhappy with. at all. I mean, JD, if I get it called away, make a few bucks in this one, this will be like $1,500. Alibaba looking good on just the buy side. That one's running hopefully like with no cap. Baidu, I have covered calls. I'm trying to roll it to give myself a few more bucks to the upside. Schwab dividend, it's okay. Schwab growth, fine. Looked at this one yesterday. I don't love that this is semiconductor play similar to SMH. We're on the right side of this trend line, maybe some chop, but I would be cautious on the semiconductor space right now. Costco. So your world's largest retailers, you've got Amazon, Walmart, and Costco. I still want to see Costco hit a 200 moving average. We've got earnings coming up in the next couple of, well, I guess it's out a month or so. It's out March 6th. So I don't know. I would, kind of gladly scoop up the dip on Costco if we come back into the 200 moving average. But if we get to fresh highs again, I'm just not chasing this thing. We've had a really high bar count since 2023. It's up 419 bars. That's a long bar count on a daily time frame. Walmart, but I've got a collar into March at 100. I also might look at a roll on Walmart. So let me see. Nike looking way better off those lows with a 65 and 60 put. MasterCard, oh my gosh, dude. Did they have earnings? They did have earnings this morning. So MasterCard beats on top and bottom. They still didn't pull back deep enough, but man, I'm glad I just didn't fight that uptrend. Holy shnikes. And Visa, same thing. Visa has earnings after market today. MasterCard had earnings this morning. So I don't know if this is good or bad for the consumer. I just feel like more people are using credit and more people are servicing their lives with debt. And credit card companies are loving it because what are they doing? Oh, what's that $10,000 average household credit card debt? That's at 22% interest rates or APR financing, 22%. Good luck getting out of that debt cycle. But it looks good for the credit card companies. There's Visa. There's American Express. Johnson & Johnson looking better off the lows. PGR had some earnings plays this week for Progressive and Chubb. Both are looking fine for some income plays. Palantir, I actually was going to look at I've got an earnings play this one out to next week. Curious if this is going to be a big move or not. Carvana, nothing there. Redfin, Zillow. Sectors. All right, quick look at the sector performance. Gold, silver. Okay, no guess. Gotcha. All right, so for the year, S&P's up 2.68. We're still being led by some interesting sectors this year. Financials leading the way. Healthcare leading the way. Industrials up there, materials up there, utilities behind, tech not so hot. Probably, and look, tech was crushing it last year, so I'm sure this is what looks to be a bit of a sector rotation. It's as simple as that. So getting out of the 30+% concentrated Mag 7, putting money elsewhere into some of these. I wouldn't even say beat up sectors. I would just say, they were more value opportunities or just getting out of the high concentration. I mean, a lot of profits were given by technology, a lot of profits given by Mag 7 last year, especially, certainly since 2023, 2024. But financials, healthcare, industrials, materials, at this pace, I would imagine that financials and healthcare, probably safe sectors to be in. Industrials, materials, we've got to, I mean, they're so far looking pretty darn good, but we've got to see what this AI infrastructure play looks like. Two thoughts on the year. I wouldn't be surprised if the first half of the year is indecisive and we have to wait to kind of see when the market takes on direction. I would hope the second half of the year gets its crap together after the Fed maybe cuts in June. Maybe things look better. Maybe inflation does truly come back down a little bit lower, not necessarily, to the 2% rate, but at least trending the right direction. Or the first half of the year is like this chop, really resilient market, and then the second half of the year just gets worse because yields go up, inflation goes higher, tariffs are taking full effect, and geopolitical situations getting worse. So as I say, it's like it's a cautious market. That doesn't mean I'm bearish. I'm just saying, man, I want to trade a lot of stuff that's just out of the money, out of the way, high probability, give price a lot of slack, right? I don't think anything right now outside of maybe some Alibaba is looking really bullish to me. Now we can talk about gold, which has been breaking recent highs, right? Gold, where are you? There we go. Gold is breaching some highs. Okay, so we've got safe haven demand. We have that's kind of it. And again, like I'm not chasing gold at these highs. I'd still like a pullback, but I'm still benefiting from gold loan going long, and I'm still in silver as well. So I mean, it's a different play, but if gold wants to break new highs, then I guess I look at this trade. It's already making a run. If we're breaking new highs and we break and we go, right? And there's safe haven demand. So again, that doesn't look good for equities to have gold performing this well because it's not like, oh, everything's bullish. No, it's mostly like choppy stock market. Equities are indecisive. Bonds have been beat up, but yields are, you know, a pain point for the market. Gold is safe haven and crazy amounts of dollar diversification. So I like it. I'm just not buying highs. I'm gonna hold. I'm gonna hold on to my silver. Like I'm still in gold. I like gold, and I'm bullish on gold. I just hate buying these highs. Silver looking a lot better. That's probably why I'm getting a big jump in profit today. Honestly, if I look at my P&L, so if I go to all positions, I'm just trying to push buttons slowly so I don't mess anything up. Let me see where most of the P&L is coming from today. Come on. There we go. All right, this should show all positions. Once I see some extra colors popping into my positions tab. Seriously, dude. I need a tasty trade update stat. Well, now it just stopped working. Cool. Let's just close Tasty down. You guys take a 5-minute break. All right. Point was, I have a pretty decent sized position in silver and in gold. So silver going up is good. I like this measured move to 36. I'm looking to see if this ends up forming a bullish pattern. I will probably end up adding some more positions here. I may even look at some cash secured puts to just stay out of the way. I have some silver futures going on as well. This is out to March. This one's looking pretty good. And I might do the same thing again to April. There's maybe some volatility, but maybe doing like an April or May silver trade, trying to get silver to go back up to a measure move at 35. SLV gapping higher. That is good for profit as well. Diagonal spread looking pretty good if we get 15 by 34. I paid $13. Break even's 28.90. Get it called away at 34. A couple of trades there. So I like SLV a little bit. I like it more than gold because I can measure the move to the upside. But gold is looking decent. So watch for a break retest. So if we break, retest, and we can go. What I don't want to see on gold is a fake and then a rejection, right? If we see a huge rejection candle where it comes back into this range, this is what I talked about on gold. So I'm just not jumping into these highs yet. I want to kind of give it a wait and see. Make sure that the bulls are in fact just closing, and then the bears are not stepping right in to dump it back into this range. So if we're up into open space, then this becomes resistance and becomes future support. So any type of pullback, I look for a bounce, and all of a sudden we're talking 2,800 is now support, and we're probably eyeing the 3K mark for a round number target. Right? But gold's been on the move. Bitcoin resilient, but not at highs, not at lows. I still think this is potentially range bound, maybe some more accumulation. I do think a nice diversification, even though it's higher risk and it's higher volatility. I do think diversification would be Bitcoin. So gold and Bitcoin are good diversifiers this year. They could be speculate, like it could be pure speculation. But if gold is going up, I'd like to think that Bitcoin can follow a little bit. We'll see how much of a disconnect there is between U.S. equities, Nasdaq, Bitcoin, futures market. I mean, if we have some choppy times in the U.S. markets, I don't know how that's going to correlate with Bitcoin. So if it kind of stands on its own more this year than before, that's going to be kind of an interesting personality trait and kind of rhythm to Bitcoin. But I think right now we're probably looking at more of a range trade, and this is a bit of a wave pattern. If there's an accumulation zone, we can come back to 90 or come back into these efficiency levels around 80, and I'll just be patient. But if we break and go to new highs, well, I've got exposure. I'm watching it. I would like to see it go higher, but I'm just not taking a bunch of breakouts. Not yet. Not yet. Okay. All right, let's see. MSTR 345. I get it called away at 310. I think I'm kind of done on this one for right now. If Bitcoin stays resilient, MicroStrategy stays resilient, I'm going to have to sit on an earnings play through February though, so that's going to make things pretty interesting. If it shows good earnings, awesome. If it shows bad earnings, I'm curious how bad it gets. Coinbase again, pretty resilient, which is looking good. Income trades, I might look to fill in the gap here on an income trade for coin. I just don't know if I'm gonna get the levels that I want. I want to start any type of like ratio spread or 1-1-1 in like the 180s. So I might look at Coinbase actually. So I look at that Baidu roll. So a to do Baidu roll and coin 1-1-1. Maybe some more trading on SLV and GLD. Japanese yen looking a little bit better, not making like a crazy run for it, not yet. DAX cannot be stopped. FTSE making a crazy run. Argentina making a crazy run. We're seeing to get some flows, non-US, which is making things showing some, I don't know, showing some global market breadth, I guess. DAX is pretty crazy. FTSE's up. That's a big surge on FTSE. Argentina, I've been waiting for pullbacks into like the 100, 144. I'm just not getting it yet. I'm not going to jump into it. China looking a little bit better. Brazil looking pretty good. I've had some shares of this one for a while. Apple has earnings today after market. Amazon pulling back a little bit. Google still in this choppy zone. Earnings on Google should be next week. Yep. So we got some more Mag 7 coming next week. There's Meta fading hard. I'm glad I took that break even trade. We're right back in the middle now. Microsoft pushing a little bit lower. Got filled in the little income trade for the 314 expiration. I'll have my little winner up here with that broken wing butterfly. Netflix, I still have a broken wing butterfly to the upside. And NVIDIA trading at 118, pushing a little bit lower. I'm still going to see if we have a gap fill on NVIDIA. I've got some trades out with March and April expirations. Tesla trading at 392. Surprisingly, Tesla is not moving a ton. I mean, if we're seeing, Meta with a lot of volatility, Microsoft been getting crushed, Tesla misses on earnings right? But it's like Tesla's not moving. Is that because Elon Musk is that close to Trump? Berkshire Hathaway, that's fine. So anyway, that's where we're at. Bonds, not really a lot of action there. 10-year yield down slightly. Down slightly. Mortgage rates haven't budged. Still at 6.96. All right. I will wrap it up there for today. I just want to do a quick spot check on some currencies. I'm still bullish on Aussie CAD. I'm still bullish on Aussie Swiss. A lot of it's just positive swap right now. No trades on the yen crosses. Aussie New Zealand, anything here? That's the trade that I'm after on Aussie New Zealand to try to get back to those highs at 111.75. Aussie dollar. I'm going to hang in there on the dollar for a little bit longer. CAD Swiss, I'm still long. Euro Swiss, I'm still long. XP touch a pocket. I think I just took all my profit on that one. Yep. So I had a diagonal spread. I actually was only in this trade for like 2 weeks. I closed out for like $200 on this one. And also I did this because, so this is I think this is a Brazilian bank. Yep. So retail clients in Brazil, the margin requirement on this was way higher. It was like a 2 to 3x margin, even though it's only a $13 stock. Margin is like 2 or 3x. So it's not a leverage piece. It's just the broker tied up a little bit more capital, which I didn't love. So I just took quick profits on that one. But I looked at this one fundamentally. It looked pretty strong. and we're getting some non-US flows. I mean, we're back down to the COVID lows were here. Here's March 2023 lows. So I took that kind of diagonal position. Yeah, it's fine. I'm curious just for fun what it does, but I'm out of the trade for a couple $100. Just wanted to check out that chart alarm. Let me go back to currencies. Euro Swiss. Euro Swiss, I'm stacking in some orders right here. So hopefully we're going to push a little bit higher than this 200 moving average and start to gravitate back up towards a nice little range high around 99 to 1.00. That's my trade. Any pullbacks, I still have pending order. I have all buy stop levels. So these are buy limits and these are buy stops. So either way, if price is going to 9,800 or 9,900, I'm getting out with that profit. Okay, and then pound Swiss, I'm still long. Still in a big range in this one. New Zealand Swiss, I'm still long. Still in a big range in this one. Waiting. Where I will add more position on New Zealand Swiss would be if we come back down to revisit this flash crash low. So this structure, just waiting, getting above the 200 moving average. The nice thing is if we turn the corner here, I look at this flash crash low. If we have a double bottom, and maybe we don't. Maybe this is a low to high swing, higher low to higher high, and we get symmetry and all that good stuff, and that's fine. That's good profit. But if we come back down to a double bottom, if I buy there and I take profit up there, that turns pretty much every position from this level to this aggressive trendline break to all these equal lows that I've been adding in onto all this. Like I've got another 8-10 positions running on New Zealand Swiss. I can buy some more. I can stack up some buy stops and see if it gets to my symmetry target. That'd be a really nice win. But patience and some positive swap for right now. Dollar Swiss I'm already out of. Dollar yen no trade. Dollar CAD. Surprisingly, nothing has happened on the dollar CAD for what? Almost a month? That's kind of wild. I stacked these positions up. I was long until we hit 1.4, almost 1.45. So that was a nice win overall. Now I'm thinking everyone's wondering like, okay, what's the dollar CAD going to do? Well, I mean, I measured the move and it hit my profit target. So I'm out of the trade. I wonder like, is this a high? Is this a high? Does the market go like that for some type of crown pattern, some type of topping pattern, and then the dollar CAD sells off? Does that mean that oil gets stronger, the dollar gets weaker? I don't know. So I don't have a clean trade on it right now, but I'm glad I'm out of that trade so I can delete that. Okay, that being said, I'll let you go. I'm going to get on the horn with Tasty Trade because their platform's been driving me crazy all morning. So I'll see if I can get it figured out. I will be back at 3 p.m. for a final hour session on my YouTube channel. Gold we already did, Lear. It's breaking highs. So we're reaching all-time highs on gold. Doesn't mean I want to buy the all-time highs. It means I'm just enjoying the run that we've been having. So the shares that I have at GLD, the trades I have in GLD, the futures trades on GC, I'm just enjoying the profits. Same thing on silver. I've got some trades on SI, some trades in SLV. Silver's looking good too. In fact, before I go, XAU, XAG is actually showing the resistance that I wanted to see, right? They're both actually going up. But what I like is if this is resistance on this instrument, that means that silver could actually get a little bit stronger or get a little bit stronger faster than gold. So if silver can outperform in the short term, that would be pretty lovely. Okay, so we'll see what happens. But I think those are looking good. All right, thanks, everybody. Have a good rest of the day, and see you soon. Thanks, bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.